Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined by Ryan Littlestone of Forex Flow. Good morning to you, Ryan. You well?
Morning, mate. I'm good. Yourself?
Yeah, very well, very well. The markets seem to be picking up a little bit. We've got the Fed, obviously, meeting today and announcement tomorrow. So let's have a look, first off, though, with the top trends. Well, there we are. Euro dollar sticks to the neutral bias in the near term. US dollar positions a little less short. Euro longs giving up some ground. That's by Rabobank. And finally, again, it's all US dollar today.
Yeah.
Wary of the buy the hawkish rumour, sell the dovish fact. Fed noise, and that's from ING. So we're going to look at a few charts just to start off with. Cable ripped last week,
Yep.
onwards and upwards. Incredible move. But we had Carney last night or yesterday with the IMF, kind of bit more dovish than probably the bulls and the hawks had expected in the market, and we've seen a little bit of a pullback. Is it overextended, do you believe?
It's only overextended when it goes down again.
True.
The fact that it's maintaining these gains from last week is a strong signal. You're looking at around about the 35 mark. If we get a good break under there and a hold under there, we could head back lower towards some of the pre-MPC levels.
Mm-hmm.
But like I say, Carney wasn't dovish, I'd say, but he wasn't as strongly hawkish as they were at the MPC. And when the market's now set up for something and they've bought into an idea, bought into the expectations, every time someone speaks, they want the same thing. They want to be comforted that this is what's happening, this is what's going. So he threw out a couple of ifs and maybes and tied it to slack, the old argument, if that gets reeled in. And the market was like, oh, hang on, this wasn't what he was saying last week to a certain extent. So that's why we saw the dip yesterday. But it hasn't lasted long, and it's still supported, still well supported. And while we hold above that 35 level, then we're looking good.
We had HSBC and Barclays have come out and said potentially we could see a rate hike this November.
Yep.
Bit too soon, do you think?
Well, you don't know. I mean, that's the thing with the comments last week, in the coming months, how long's a piece of string, but the coming months isn't next year. It isn't, by the end of next year. HSBC, they're looking at November and May, I believe. November this year, May 2018. They've hiked their end of year forecasts up from 120, I think, to 135 or something like that. So, everyone's on the bandwagon. And is this the BOE tempting the markets and giving them the forward guidance they want to say a rate hike is coming, it's imminent, whenever that will be in the next few months, but it's coming, and that's why the pound's sitting up there nice and high. But then the question you've got to ask is, if we do get that hike in the next few months, how much higher is that going to be worth to the pound? You might get a knee jerk, but after that, it's probably back to what next.
And that's the thing is that hike already priced in, and is it priced to disappoint as well? And November obviously is a long way off. We're in September. What would you be doing at the moment? Would you be going long on cable or just trading ranges?
Yeah, now we know what the BOEs, what they've signalled. Then you've got to side with what they're going to do. But pick your levels. Would I buy it right up here at the top at 136? No, of course not. If I'm going to trade off the 135 level, then I would keep it fairly tight. Maybe under the recent low at sort of the 60 mark, 34.60. But if it breaks that, then you might want to sit on your hands so you get to that lower level down there if it retraces a bit more of the move, maybe down to 133, something like that. But otherwise, you've got to side with the bias, and the bias is that the traders are looking to buy the pound and buy the dip, so don't fight it.
Trend is your friend in that case. Moving on, we're looking at the dollar yen. A little bit of a breakout. We've spoken before about this kind of 110 handle, and here we are up at 111. Dollar back in favour, do you feel?
I don't think it is. I think this is more of a yen move. You look at the crosses, they're all much higher. And that's a reason why, if it's pure dollar strength, then you'd see the pound, cable and euro dollar lower, but we're not. So that's gives you a big clue as to what's moving this. The yen is being sold and that's sending the pairs higher. And you've got to look at it. Technically, if it's not a dollar trade, if it's something else driving it, then you can rely a bit more on the technicals, because we're not getting things out of the US. Obviously we've got the FOMC, so we probably will start to get, probably today and tomorrow, we'll start to get maybe some bids going on in the dollar itself. But these levels, look at 112, 112.50. They were 112.50 was a historical level that's always, you know, had a saying things. So keep an eye on there. Again, if you don't take on these higher levels, you don't break these higher levels, then that suggests that, you know, you're going to see consolidation at least.
Understood. And finally, looking at euro dollar, that pair. Well, look, it's a clear trend, trading above the moving average. Still, you've been a euro bull.
Yeah.
Is it still the case?
Yeah, still in there. You know, again, it's well supported. You can see that trend there. You know, we're dipping down to try the low 19s, and it's holding, and now we're knocking on the 120 door again. So, but if you want to trade it intraday, look at the recent highs in 120, lean against those with a fairly tight stop. If those highs hold, then you're going to get a retrace back. Same with the support. You know, look where the recent support is, you know, particularly that low 119s. You can try a long from there again. You've got a bit of room there to keep it under maybe to 1860, but a break of that, and you know, you could see something steeper. But trade the ranges. You know, pick your levels and trade in between until we get another move.
Understood. And just looking ahead at the economic calendar, well, nothing really to move the needle. We've had some ZEW data out from Germany. That was positive. The European sentiment was a little bit weaker. So I think probably people will be trading on the back of the numbers that are already out, but obviously mindful of the Fed tomorrow. If you're a yen trader, look for the export imports in the morning. Just looking ahead briefly at the Fed, again, do you think there'll be anything of substance there? QE reduction is probably where the focus is really going to be.
Yeah.
Do you think we'll actually see anything come out from Yellen?
I don't think we'll see anything major. I mean, obviously the focus is going to be on the hikes, but there's also a lot of focus coming in on what they're going to do to wind all the QE down. In market terms, it really shouldn't be a big event. You know, if as a colleague of mine said, if the market moves 20 pips on comments on that, then you know there's something wrong with this market because we know it's coming, and really it's not a market moving event. You know, the Fed can wind this down over 30 years if they want to. You know, they can take it down $10 a day. You know, something like that. There's no particular rush to drain the liquidity, and not in a way that's going to upset markets, upset the economy. So that side of things, I think, is, you know, I don't think there's anything to trade there. But you know, if they turn around and say we're not winding down, then the market might get spooked, and you know, all sorts of things can happen. On the rate front, you know, again, is the economy going along nice enough? Jobs, you know, strong, still going strong. Wages, another question mark. Still got that question mark over wages, and that's what they want to see. But the housing numbers here today could be quite important, because the last couple of months we've just seen a little tailing off, a little wobble in the numbers, and obviously that's going to filter through into the overall economic picture for the Fed and whether they decide on rates. You know, if housing's starts and the whole industry starts to, you know, slip back again, then people are going to start thinking, okay, you know, we've had our boom for what it's worth. It's going to affect growth, and you know, that's going to take hikes off the table again. But it's all to play for, as they say.
Fantastic. Well, Ryan, thank you very much for joining us today on FX Street Currency in Play.
Cheers.